Okay, I hope everyone's having a nice weekend. Doing another weekend update. Got a lot to cover today, and it sure looks like a pivotal moment in all markets as we approach this final quarter of the year. I continue to maintain that the magnitude and the sheer size of the rally that we've seen this year so far in traditional finance as well as the crypto market will be exceeded in the next 3 months, in the next 3 to 6 months. Let's put it that way. I'm starting off with a daily chart of Bitcoin just to kind of illustrate this accumulation phase that I've been claiming we're in, and again, it's still just a claim until until it resolves itself and we can look back on it. I'm not a financial advisor. Please don't take anything that I say as financial advice. This is pure education. Do your own research. With that said, let's dive into it. And so again, this is a daily chart looking at what we've seen since we broke this preliminary support that had held for some time back in August, right? That low $28,000 range, mid $28,000 range. We broke that in what we call a selling climax in Wyckoff, right? Which can be depicted as this SC, selling climax. At which you have an automatic rally, kind of a snapback V, getting market participants hoping and thinking it's a V-shaped recovery, and then back to a secondary retest and starting to just establish what ends up being a pretty prolonged, in this case, what I'm claiming is an accumulation range, right? And then you get these deviations out of the range as we see on the upside, and then back in terms of a secondary test in this phase B section, which I'm claiming we're in, excuse me, and then a spring type of capitulation that runs all of the previous lows as we saw here, including the low of the selling climax and secondary test in phase B, get a test, and then you want to see power coming out of a spring, right? That's the hallmark of a spring, is a powerful move, test, and then a pretty quick reclaim of the majority of this, the previous range, right? And that previous range is defined as this, 26,000 to 25,000 and change, right? Mid 26s to mid 25s, and we ended up seeing that. And now we are just kind of consolidating, creating these higher lows, right? Higher high, higher low, in the midst right now of kind of a decision point here, right? Where we've got this downtrend that we've been in since July. We've broken out of that. We've got this last point of support, this LPS region that I've circled here. And we've got a couple of them, right? This isn't, an exact one-to-one replication of this image at the top, but the point of these illustrations is what's going on, right? This last point of support held, right? We got a wick below it, it held. We got a break out of this downtrend and a retest, and that's holding, right? And what's this last point of support that I've got marked here? That's this next range above it, right? That's the next support range that sits above the previous range. And so the last thing I want to point your eyes to is the daily cloud, right? And this daily cloud has provided a lot of resistance, right? 1, 2, 3 failed attempts, 1, 2, 3 failed attempts. And now the daily is in the cloud at this last point of support region above the previous ranges of support, and structurally looking very similar to what you'd see in this region prior to a move to the top end of this range, right? Somewhere up in this neighborhood, consolidation, and then leave this range for good, which is what I'm expecting will happen. All right, let's take a look at an updated count. And so I posted about this. Let me move this over here so we can see, what exactly we're talking about here. I posted about this on Friday. I did a video kind of talking about, this narrative, this ETF narrative that, the market seems to be waiting for, people seem to be waiting for. I contend this market has been accumulating and we've left accumulation. And now, the bulk of this move is in front of us. And if we look back to the same structure, right? Let me pull up the same type of structure here that I contend we are in here. The move out of this expansive range, I mean, we did over a 2x, right? Before the market validated with news, Tesla buying $1.5 billion worth of Bitcoin. So in my mind, that news, whatever it is, if it ends up being a spot ETF, that comes when we're multiples higher, right? Whether that's at 40s, 50s, 60s, beyond, I don't know. But the charts are telling me, and Elliott wave tells me its guiding principle is that, these impulses are waves of emotion, right? These corrections are pits of despair when it's all over, right? It was all over here when in fact it's the opposite. You're at the beginning of a fresh impulse. And what happened here? The news was the worst. The whole world shut down because of COVID. And so what happened again at this 4 low, FTX, you had the traditional financial markets hit their lows. And so again, was that the beginning of the end? No, so far it was the beginning of a new move. Okay. And so just wanted to review that quickly to kind of illustrate that I do not believe that an ETF is needed to get this next impulse kicked off. I do believe that some big news is needed in order to justify and distribute at prices much, much higher. I mean, effectively $1.5 billion worth of Bitcoin isn't a lot of Bitcoin. MicroStrategy holds $4 or $5 billion worth of Bitcoin, 158,000 Bitcoins. And so just to get a functional ETF up and running, I'm no expert in ETFs, but if the QQQs hold a couple $100 billion worth of assets, and I see some ETF experts projecting that $100 billion of inflows could come in from the approval of ETFs. Well, that's far greater than $1.5 billion. And the price of Bitcoin doubled within a couple of weeks of, or not doubled, went from 25 to 42 within a couple of weeks of that news being announced to the market. So you better believe that that type of demand can get price moving fairly quickly, in my opinion. Now, what's the contra to this count, right? Because I haven't been doing this a lot, but I do want to be cognizant of some other scenarios that still would keep this structure in a bullish kind of in a bullish mindset for me. So let's say this was a B and then C correction here, right? Where I've got two ended. We had, let's say a 1, 2, 3, 4, and then 5 wave correction that hasn't completed. Even a touchdown here at 23 in my mind doesn't invalidate this count, and my thought here that this bull market is still closer to the end than it is closer to the start. Okay, what's our next chart? Our next chart are some more points of confluence here. What happened to my chart? Okay, there it is. That's not the chart I wanted to pull up, so I'm just going to go pull it up. Next, I'm looking at the Bitcoin pairs. Okay, when I look at Bitcoin compared to Nikkei, when I look at Bitcoin compared to SPY, what am I seeing? What am I seeing? Well, here's what I'm seeing on Bitcoin versus Nikkei. And mind you, Nikkei is breaking out. And those of you that followed me on Twitter, I've showed you that in each of the last breakouts with Nikkei, Bitcoin has also broken out and had an impulse. And so this is what Bitcoin denominated in Nikkei looks like right now. And this looks like it's on the at the apex of a triangle. Nothing is guaranteed, but very critical structure here, very similar to what we saw back here. The difference being we are below the 30-week, whereas when we were at the apex back in September, we were above it, right? So that's a key difference. Pull up Bitcoin versus the Nasdaq, and it looks like all my charts just kind of didn't save for me. That's okay, because I can always pull them up. And we are going to Bitcoin against the Nasdaq. And what do we see here? Well, we see a very similar structure as we saw back in 2020, in late 2020, in my opinion, right? You had a pronounced downtrend, right? Where price rejected, broke off of it. You got a retest, and then attempt to break out, failed, attempt to break out, failed, and then finally got a breakout, okay? What do we have going on here? We have, you know, a pronounced downtrend, right? Attempts to break out, fails, attempts to break out, fails, breakout, retest, another attempt to break out, fails, another attempt to break out, fails, fails, and now we're at a critical structure junction, should I say, very similar to what we saw back in this region where Bitcoin broke out against the Nasdaq decisively and didn't stop for months. All right, what's next? Let's see, Bitcoin versus DXY. Okay, did it to me again, reset my charts. Thank you very much. Let's just go find it, no big deal. All right, here we go. And very similar again to, you know, the action that we saw back in the fall, right? Where we have a very pronounced downtrend, breaks out of it. We got to break out of it. And then, you know, kind of consolidation before we ran up. And I'm seeing the same type of structure here, folks. That's what I'm seeing. And so does it guarantee we're going to break out? No, but everything is pointing in the same direction. And that's what increases the probabilities for me. The Bitcoin pairs against the dollar against, and mind you guys, what has happened in the dollar in the last 1, 2, 3, 4, 5, 6 weeks? The dollar has been going in what direction in the last 6 weeks? We'll review it, that direction. Here's what Bitcoin's been doing against the dollar, consolidating. And now it appears to possibly be wanting to break out. So what happens with the dollar if and when the dollar starts to pull down? All right. Next, I'm going to go to MSTR. Looks like all my charts reset. That's just fantastic. Okay. Go ahead and just pull up MicroStrategy, right? Because MicroStrategy is, as you all know that have been following me here, it's a bit of more of a proxy to underlying health of institutional demand, in my opinion, given, you know, there's so much trading going on with Bitcoin, right? There's so much leverage that gets taken on at key inflection points that it's hard to get a great gauge of you know, the true health and uptrend of the market. So I've got the 30-week up here, and again, let me throw up the cloud as well. What do we have? Well, I talked about last week how we closed right at that 30-week. We lost it. We lost it early this week. Kind of bounced off the top of this cloud, like to the T. Bounced off the top of this, and I've got this blue line is this candle from back here, right? So kind of a critical point where most of this price action, as you can see, occurred under it. Okay, so that to me is a key accumulation range that's been established for what, a better part of a year and a half. And so we closed over that, and we just reclaimed that 30-week into the close on a Friday. So again, does that mean we're going to go straight up from here? No. Does that mean we're going to go straight down? No. Does that mean we're going to go sideways? No. It just means in my mind that this bullish structure, we've got a retest here of this important area, and that lines up well with what I'm seeing with Bitcoin, with the pairs, with the dollar. So my base case assumption here is that expansion continues to be next, right? And the hardest part is trying to time these things. This correction, if you were to ask me back in July, how long is this correction going to last? Because this was impulsive. Let me show you this move on the daily. I mean, this was just like your textbook 5-wave move into a blow off one. Okay, what do I mean by that? Just textbook impulse five waves. 1, 2, right? 3, 4, and then it just blows off, right? Like that is a beautiful impulse move to mark the end of the first major impulse. And so back here, I would not have said, we're getting this A, B, C correction as long as this went on. Absolutely not. I'll be the first to admit that, right? My view was this area was the end of the correction, and I was wrong, right? On my Mara charts, if you follow me on Twitter, I've been accumulating in this region, which is fine because it's still in my mind a great place to accumulate because I'm thinking long term, right? I'm not a trader. I'm not trying to make decisions for a couple of weeks. I'm trying to make them for 6 months, a year, that type of thing. So I did think that was that was a good one to point out. Next, we've got SPY. Okay. Well, this one, as we talked about last week, I said I thought I saw the markets bottoming on Monday or Tuesday and pivoting. And we didn't. We made what I consider the pivot on Wednesday. And that pivot to me is illustrated by this hammer candle. Okay, go Google what a hammer candle looks like. Go Google when they occur. The key is when they occur, right? And so in the context of a downtrend, when you see this a hammer candle like we've got here, the probabilities are that potentially marks the bottom of a trend and a new trend emerges. Okay, is a new trend going to come out? If that's what it is, straight back to the top, who knows, right? Who knows? This could consolidate for a couple days and then make its move. I could be wrong, and we could continue to move sideways or even down, but the probabilities here are telling me that this C wave is in, that this 4 wave is in, and next is expansion. And this is going to be kind of a fun exercise. We're looking at the Nasdaq here when I have to re-pull it up because it erased it for me. Thank you very much. But this is, I think you'll enjoy this exercise. And this goes to why I believe these corrections are over. Okay, last week I talked about let me pull up the 30. Okay, this is a 30-week simple moving average. It's up. You guys that have followed me, guys and girls that have followed me, know my thoughts on its importance, identifying where we are in the trend. I pointed us back to this region here, right, where we have this impulsive move off the bottom, and how this price action that we're in right now closely resembled what we saw back in the fall of 2020. There's a difference. And I had these lines drawn out last week, and I said maybe we do come down to this 30, test the bottom end of this channel. That's where I'd expect to see this move conclude. So far, that's what looks like it's playing out, right? So far, that looks like that's how it's playing out. And these corrections are similar but different. Okay, so what do I mean by that? So let's just go back to this correction that we saw back in the fall of 2020. And what type of correction was it? Well, it was more of like a running flat correction, right? And this is what a flat correction is going to look like, where you've got your A that kind of breaches everything, the range defined below it. And then you just kind of flatten out. Correction C doesn't breach A, and then you come out of it. And so this structure was more of a flat type of correction that resolved to the upside, right? And let's take a look at this correction, if in fact this is the correction, right? And like I said, I don't know what's going to happen next, but my probabilities are informing me, and this is what I'm using as my guide. This is a zigzag ABC, where this A wave, this C wave are pretty similar in length, right? And so you've got that leg, and you've got that leg, and they're very similar in length, whereas C breaches A's low, and you want to see a strong reaction at C. I consider this a fairly strong reaction. Still kind of an indecisive candle. This candle in and of itself just kind of speaks to indecision. So there isn't much bullish or bearish I can surmise from the candle itself. But the fact still remains. The fact still remains that on the high time frame, when we're looking at, let me get rid of that. When we're looking at this chart objectively, we are above this 30-week. The trend has been up. The key area, the key pivot point in this market, this entire market to me, is this, what I'm circling here, that August high where we all got faked out, myself included, thinking, all right, it's on, V-shaped recovery. We got to close above the 30-week, only to go on to make new lows. The fact that we closed the weekly above, we're still above this key area, right? Still above this key area is a sign of strength. That's all I can say about that. Okay. What is next? The dollar. Whew, boy. This dollar. Why doesn't she just keep on going, right? Let's go like another 10 weeks. Let's see if it can break records. What am I seeing in the dollar? Let's see. Let's throw up a weekly chart. Well, I mean, look, at the end of the day, this is just a tough read for me. Let's just call it what it is, right? Let's call it what it is. Last week we were bumping up against the bottom of that cloud, and that for me was a great sign. Saw exhaustion on a number of levels, but the dollar didn't care. I can't pertain to know what's driving this. But what I will say is that when you look at, let me pull this up. Okay. This is what I have up here is a chart of the Nasdaq. Okay. When I look at the level that we are here at the dollar and say to myself, okay, when was the last time we were at this level? Let's come back. Let's come back. Let me use a different way to illustrate it. The last time we were at this level was where? Was where this rectangle is, folks. Okay? Was where this rectangle is, folks. And so why is that important? Here's why. Here's why I think that's important. Because from that level, oh, it's not going to let me do it. But the Nasdaq is up over 30% from those levels. Okay. From those levels, the Nasdaq is up over 30%. And look at the direction of these markets. And so whether we continue going with the dollar or whether we do pivot and this is a deviation, that doesn't inform my investing. Doesn't inform my investing because I'm not pertaining to understand what the implications are of it breaking this correlation, because it's done it before. It did it during the .com boom. The dollar ripped. And so let me just get rid of this for a second. And so much like we had a deviation here to the underside, undercut the range lows and made us think that we're going to keep going, we could have the same thing going on here. Deviation over the range highs and reverse, or it could keep going, right? So we're going to find out at the end of the day. This is what it is. All right, next chart, ETH. All right, I haven't done ETH, I don't think, in a few weeks. Okay, what do I see with ETH? Well, ETH finally is getting some momentum here. This, this large Adam and Eve that I've kind of drawn out here with this massive kind of cup broke this back test area that I've been looking at. We lost a 30-week, whereas back in 2019, 2020, very similar kind of Adam and Eve double bottom, very clear retest of this breakout range, and then it went. Here we didn't have that, right? The bearish view here would be, we breached and notice that candle there where it breached, right? We breached that range 17 14 area and have consolidated. We got a big green candle right now, right at the bottom of this, right at the bottom of the cloud, right when this cloud is about to get lost. We're seeing power in this move. And so what I'm looking for, and again, do I think ETH is about to go down? I don't, because again, if investing were as easy as just saying, oh, it's an Adam and Eve, place your stop loss right here, right, and let it run, then everyone would be rich. It doesn't work that way, right? In terms of my thought, and as a long-term investor, as I'm approaching these things, that's what traders do, and that's how traders can get chopped up, and then this could easily just go, right? That could easily just go with the bullish view that I have in other markets in Bitcoin. We're also in this triangular, right, ascending triangle type structure. It's consolidating. And so that to me is a possibility. And obviously there is another possibility, right? And that's lower. But I just, again, the way that these markets are aligning, this to me is just a deviation. And my expectation is to see, in terms of confirmation of an impulse with ETH here, is a powerful move. What do I mean? When this cloud is breached in one go, right? You breach it, maybe you get a retest at around 1900, and then it starts to make its move. That's how I'm looking at this. And folks, a lot of these things have to do this, right? This 30-week, same deal with Bitcoin. I don't think, you know, you can just get dribbles up, dribbles up, dribbles up. I think there's power needed to get through a lot of this overhead resistance that a lot of people are looking at, and we'll see how that pans out. Mara, I posted this count on Friday, my updated count. Again, I think the way I'm viewing this entire structure is that the C correction is in. Again, I had started accumulating in that area. I've been accumulating some miners even more. Again, this isn't financial advice. That's just, you know, I'm transparent about my positioning. This could most certainly go the other way. Don't listen to me. But from the way that this count is playing out, this looks like a very standard ABC correction, much like we saw ABC correction back in October, very much aligning after the initial impulse, right? 1, 2, 3, 4, 5. What do we see back here? We saw 1, 2, 3, 4, 5 blow off to mark this first impulse, followed by these ABC corrections. So that's how I'm reading Mara. And I think I got one more. I think I got gold coming up. Yep. Last but not least, gold. This is the monthly chart of gold. Let me just throw up the weekly really quickly. Week. Okay. So on the week, we lost at 30 many weeks ago. 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. So 2 months ago, you saw it try to kind of reclaim underside, but got rejected. It got rejected hard last week. But if I'm objectively looking at this, sorry, pull this down so you can see it. Looking at the structure as an accumulation structure, what did the gold bulls have in their favor? Well, they have in their favor that this is a higher low. This is a higher low. Most of the price action in this range has been in this range that this is still above. And so a case can be made for this section being the LPS, last point of support, and then you're getting a backup. BU LPS is a backup to that last point of support, which most certainly the case can be made there as well. Now let's put the monthly chart up. And what do we see? We see the 30-month is still holding, right? Held back here. We haven't even tested it now. So could we come down a little bit further? Sure. But from a structural standpoint on the monthly chart, again, still see you've got a higher low and you have a higher low. Okay. Now we breach 17 high 17s, and now you don't have a higher low, but you still have, in the context of this overall trend that gold's been in, you have an uptrend. And so, you know, just some different ways to look at it. Folks, that's it. That's all I have to cover. I hope you have a great weekend. I look forward to doing some more of these. I suspect next week's is going to be an exciting one. I really do. And so we'll see you in a week. Take care.